Are you one of those traders who spent days, maybe even weeks, studying candlesticks? Endless hours watching YouTube gurus, learning every pattern, memorizing every name, hammer, engulfing morning star. You feel like you're finally ready to crush the market. Then it's 9:30 a.m. in New York. The bell rings. The market opens. Charts light up. Candles start printing fast. You recognize them, one after another. Patterns you studied. They're telling you something. Buy now. This is your moment. You feel the rush. Confidence. This is it. But it doesn't last. That confidence fades into nervousness. Excitement turns into hesitation. Then fear. Then confusion. And finally, frustration. You follow the candles. So what went wrong? Here's the harsh truth. Most traders lose not because they don't know candlestick patterns, but because they blindly trust them. They treat them like signals, not tools. They ignore the bigger picture. They trade shapes, not setups. But in this video, I'm going to fix that. I'll show you exactly why candlesticks fail you and how to make them work in your favor. Keep watching till the end, where I'll teach you how to trade candlesticks the right way, with context, confirmation, and confidence. We'll break down the 4 critical context factors that turn candlesticks from false hope into powerful confirmation tools. And I'll walk you through a real-world example that could easily wipe out your propfirm account. If you don't understand this correctly, let's get into it. Let's get one thing clear. Honestly, I could sit here and make a 45-minute video explaining every type of candlestick, what they mean, how they form, and how they're supposed to work. But let's be real, that's already been done. There are thousands of videos, blog posts, and courses out there teaching candlesticks inside and out. You could become a master in theory without ever placing a single trade. So if all that information is out there, why are so many traders still losing money, even after mastering all the patterns? Because they're missing the most important part, context. Now let me be clear, I'm not against candlesticks. They're useful, they're powerful, but only when used correctly. To me, candlesticks are tools, not signals. Relying on them alone is like swinging a sword in the dark. You might hit something, but more often than not, you'll miss, or worse, hurt yourself. Candlesticks should be treated as reference points, not confirmations. They show what the market is doing, but not why it's doing it, or whether it's about to continue or reverse. And if you read them without context, you're not trading, you're guessing. Before I dive in and break down the 4 key factors that heavily influence your candlestick decisions, let me give you a real-world example, so you get the bigger picture. You're watching a 1-minute or 5-minute chart, zoomed in tight. There's been a slow, low-volume drop, 50 to 70 points over the last hour. No panic, no breakdown, just a lazy pullback. Now in your mind, you're thinking, the market's been bullish the past 2 days. This could reverse soon. Then you see it, a large red candle, quickly followed by some buyers stepping in. You wait, then comes the bullish hammer. You hold your breath. A few candles later, another bullish hammer at the same level. Now your brain screams, this is the bottom. You've got all the classic signs. Holding price, long bottom wicks, clean hammer structure, and most dangerously, your bullish bias. You go long, price moves up a little, but then fails to break the last swing high. Then it rolls over and drops another 60 points. Now imagine you're holding just one NQ futures contract. You ignored a 10 to 14 point scalp opportunity, chasing the breakout that never came. And now, you're down $1,200 on one trade. If you're trading with a funded prop firm, like most people today, with a $50,000 account and a $1,500 drawdown limit, your account is almost done. It's harsh, but it's real. This is what happens when you trade candlesticks and ignore context. Now, let me break down each of those context points so you never make that mistake again. The 4 conditions that make or break your candlestick trades. Number 1, did it form at a key level? Support, resistance, supply zone, demand zone? If the candle didn't form at a meaningful price level, it's just a shape on a chart. You can find bullish engulfing candles and hammers everywhere. But unless they're forming where buyers or sellers have historically stepped in, they're just noise. Candles don't have power on their own. Their power comes from location. A hammer at random is just art. A hammer at demand is potential action. Number 2, was there volume confirmation? Did volume spike? Did big players step in? Was the move supported or was it hollow? Most traders don't even look at volume. But volume is the heartbeat of any candle. It tells you, was this move real or just a shadow? A beautiful engulfing candle with no volume? That's a trap. Volume tells you who's behind the move and whether it's worth trusting. If the big money didn't show up, why should you? Number 3, what time frame are you on? 1 minute, 5 minute, 15 minute? The smaller the time frame, the louder the noise. Lower time frames are where traps live, fake outs, manipulation, and indecision. A hammer on the 1 minute means very little unless it aligns with higher time frame structure. Context scales with time. If you're zoomed in too tight, you're not seeing the game. You're just staring at pixels. Before acting on any candle, always ask, does this match the bigger picture? Number 4, was it with the trend or against it? Trend is everything. If your candle pattern aligns with the dominant trend, it might be a signal. If it goes against the trend, it's probably bait. Most new traders lose money by trying to catch reversals. They think every hammer is a bottom. Every shooting star is the top. But the market doesn't care about your shapes. It cares about momentum and continuation. If your candle is against the flow, it better be damn perfect, or you're about to get steamrolled. How to actually trade candlesticks with confidence, not guesswork. So here's the truth. The candlestick is just the surface. The context is the foundation beneath it. You can memorize every pattern in existence, the hammer, the engulfing, the doji, and still lose money every single day. Not because you're not smart, not because the market is rigged, but because you're trying to read one word without understanding the sentence it's in. A hammer doesn't mean buy. An engulfing candle doesn't mean go all in. And a doji doesn't mean brace for reversal. They're just words. The real meaning comes from how they fit into the sentence, the paragraph, the entire story playing out on your chart. So how do you fix that? Before you place any trade based on candlestick, stop and ask yourself, is this forming at a meaningful level? Support, resistance, supply, demand? Is it backed by real volume? Are the big players showing up, or is this just noise? Is it aligned with the bigger trend and market structure? Is the time frame you're on giving you clarity or confusion? Because when those 4 elements align, that candlestick gains weight. It carries real meaning. It's no longer just a memorized shape from a cheat sheet. It's a clue in the story the market is telling. Trading isn't about spotting patterns. It's about interpreting behavior. And behavior, just like language, only makes sense in context. So next time you see that textbook setup and your finger itches to click buy or sell, pause, zoom out, run the 4 filters, ask better questions. When price, level, volume, time frame, and trend all converge, your edge becomes real. When they don't, you're not trading, you're gambling. The best trades aren't the flashy ones. They're the quiet ones that make sense from every angle. And sometimes, the best trade is the one you don't take. Because once you stop treating candlesticks like magical signals and start treating them like small parts of a much bigger picture, that's when everything changes. That's when trading becomes strategic, not emotional. That's when losses become lessons, not regrets. That's when you move from random results to real consistency. If this shifted your mindset or saved you from blowing up your next trade, do one thing for me. Like this video, so more traders can break free from the candlestick trap. Comment below, what's the one pattern that always fakes you out? Let's learn from each other. And subscribe, because here we don't just chase charts. We master the mental game, the edge, and the why behind every move. Thanks for watching, and trade smart. I'll see you in the next one.